Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 1st of August, 2021. And we're publishing our gold and silver weekly update for the week ending the 30th of July. Now this video is a repeat of the one we published yesterday. And so if you listen to that, please ignore this one. As you know, we are experimenting with different thumbnails and introductions. If, of course, you haven't had an opportunity to listen to yesterday's video, then please go ahead and enjoy this one. We've seen slightly higher gold and silver prices this past week, and let's see what we forecast for the coming week. So here goes. Gold rose $11 last week, rising from $1,803 to $1,814, having hit a high of $1,832 and a low of $1,794, a rise of 0.6%, reversing last week's losses. In sterling terms, though, gold finished the week at $1,305, down £6, showing the strength of sterling against the dollar. And in euros it closed at €1,528, that's down €2. Silver rose 30 cents from $25.20 to $25.50, having hit a high of $25.82 and a low of $24.51, a rise of 1.2%. In sterling terms, silver closed at £18.34, that's up 1 penny on the week, and in euros it closed at €21.49, that's up 0.08 euros. The gold to silver ratio fell slightly from 71.5 to 1 to 71.1 to 1. Bitcoin's up $5,989 from our report of last week and currently stands at 39,674. It's been as high as 40,844 and as low as 32,032. On the issue of Bitcoin, just a quick shout out to a channel which we've had running now for a couple of weeks called Crypto Plus, replacing the Richard and Greg channel, where we speak about cryptocurrencies, definance and alternative investments. So far we have admittedly focused on cryptos, but that will soon be changing as we shall be speaking out about other investment types and categories too. Going back to the markets, the Dow Jones closed on Friday at 34,935, down 149 points on the day and down 126 points on the week. The S&P 500 closed at 4,395, down 23 points on the day and down 16 points on the week. And the Nasdaq Composite closed at 14,672, down 105 points on the day and down 164 points on the week. In view of the fact that these indices are all very close to all-time highs, last week's fall is really a much-needed breather, and perhaps a further fall is necessary before they can go even higher. Brent crude closed at $75.41, that's up $1.31, and WTI crude closed at $73.95, that's up $1.88. Primarily because of the weakness of the dollar, because as we can see, the dollar index stands at 92.17, that's down 0.74 on the week. Now we concluded last week's video with the following forecast, quote, "So we are expecting a little more movement in gold and silver prices this coming week, obviously data dependent, and we see gold trading between 1750 and 1875, with 1700 and 1925 as outliers, and silver trading slightly lower, between 2450 and 2650, with 2350 and 2750 as outliers." Well, gold traded last week within a range of just $38, between $1832 at its high and $1794 at its low, closing mid-range between the two, and as last week above the psychologically important level of 1800, and trading within the mid-range of our forecast, which is very pleasant for us. Silver traded last week within a range of $1.31, slightly higher than the past 2 weeks or 3 weeks, which tended to trade within a dollar range. But again, it's still a tight range, with a high at $25.82 and a low of $24.51. It closed at 25.50, close to the upper end of its range, and again exactly in the middle of our price forecast given last week. So let's first take a look at gold and see what happened. Well, gold oscillated both within and outside of its Friday's close, rising strongly on Thursday but falling back again on Friday. You see, the FOMC meeting and Fed Chair Jerome Powell's statement was the most impactful event on last week's market, and we went into some detail of that announcement in our video published on Thursday entitled Gold and Silver Prices Rise on Back of FOMC Announcement, and we've placed a link below. But in broad perspective, it was a relatively dovish statement confirming that there will be no tapering or interest rate rises until the economic recovery is confirmed and close to full employment, or at least a direct path towards full employment, achieved. This acted as a significant tailwind for precious metal prices as the dollar fell over 1 point not long after the statement. Now, overall, gold is still in a state of consolidation, and until it breaks the 1830 and then the 1860 level, it is quite difficult to be bullish at this stage. Once it beats those figures, then our view will change. On the downside, we have a number of support areas. The 200-day EMA at 1800 and 1790 and 1750 lying underneath. Now, the next Fed meeting will take place on the 21st and 22nd, so the announcement will be on the 22nd of September, which is some time away. And therefore there is really no pivot point around which gold or precious metal prices can convalesce. And therefore, their reaction will now to a large extent be at the mercy of market trading, which usually in August is moderately subdued. And in our view, most analysts, who are not on holiday that is, will be analysing economic reports being announced and perhaps in some cases attaching too much weight to them in either direction, because they will be without Fed guidance, and therefore their assessment will be based on supposition and what we call educative guessing. Looking at silver, we see it opened the week up, fell sharply on Tuesday and then recovered strongly after the FOMC announcement, falling back just slightly on Friday. Many technical analysts are forecasting a potential range for silver over the coming weeks between $28 and $24. We have resistance at 25.50, which is where the 20-day EMA stands, and then 25.80, which was the week's high, and then we have the 26.10 level, which is the 50 EMA. Support rests at 25.50, 25.30, 25, with 24.70 underneath. So where silver stands at the moment, it's both at its support and resistance level. Be interesting to see how that reacts. Frankly, each of these levels in our view are so minute they could be broken quite easily in either direction, though we're still not expecting huge divergences between highs and lows at this stage, unless of course some black swan event occurs. Now, as with the previous week, last week provided a menu of mixed economic data. New home sales were lower and durable goods orders proved very disappointing to say the least. Initial jobless claims were better than the previous week, though still higher than the median forecast, but the first estimate of quarter 2 GDP stood at 6.5% compared with 6.3% previously, which sounds good, but again lower than the median forecast of 8.5%. Personal income figures announced on Friday for June came in at 0.1, compared with minus 2.2 in May, and consumer spending was up at 1% compared with minus 0.1%. Core inflation stood steady at 0.5%, and consumer sentiment rose in July to 81.2 compared with 80.8 in June. So, as we say, a mixed bag. Now, just a quick plug to what we're doing each day. Every morning, we're providing a 10 or maybe 12-minute update of where we are in relation to news headlines, economic announcements, and market prices. So do look out for those, because we are including what's occurring either that day or the day before in a summary format, so that you can get an indication of where potentially the pitfalls and opportunities may lie. Now, this coming week we have quite a few economic reports coming out of the United States, and important ones too. On Monday, the Market Manufacturing PMI and the ISM Manufacturing Index, both for July, and construction spending for June. Tuesday, we have factory orders for June and motor vehicle sales for July. Wednesday, keep a note of this, the ADP employment report for July, which will give us an indication, not a guarantee, for what's going to happen on Friday. And we have the market services and the ISM services PMI index for July. Thursday, weekly jobless claims and trade deficit for June. And then on Friday, the non-farm payrolls, unemployment rate, average hourly earnings, all for July, plus wholesale inventories for June and consumer credit for June. Quite a menu. A very important week, and especially bearing in mind what we've said about no more FOMC statements until late September. This first round of crucial data will provide us with an indication of how markets intend to react during the course of the next couple of months. Now, apart from the Olympics, most of the news published by our media is focused on the rising global spread of the Delta variant of COVID-19. And we can see countries beginning to adopt further restrictive measures, which hopefully won't, but certainly could, have a negative impact on global economic growth and potential recovery. So where do we see gold and silver prices moving this next week? Bearing in mind that we continue to be, at a very large extent, reliant on the movement of interest rates, bond yields, and the US dollar value. So we are expecting a little more movement in gold and silver prices this coming week. Obviously data dependent. So we see gold trading between 1750 and 1875, with 1700 and 1925 as outliers, the same as last week, but perhaps we'll see more movement between highs and lows, and the silver range trading between 24.25 and 26.25, so a little bit up, with 23.75 and 27.25 as outliers. They are our thoughts. Please share yours. Also, if you like what we produce, give us a thumbs up. Hopefully share the video if you can, if you have access to the platforms, the various social media platforms, but most certainly please subscribe and press the bell sign. Also, if you're not a member of Crypto Plus, please go over to that. We've got a link below where we'll be talking about other financial issues other than gold and silver. Thank you for listening. Have a great weekend. Have a safe weekend. And as always, have a very prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.